Hi, I'm Mark King, investment editor at Columbia Threadneedle Investments, and here's what's in my weekly column. So inflation has fallen in the UK. According to the Office for National Statistics, the Consumer Price Index fell to 0.9% in October, down from 1% in September, a move that surprised many economists and analysts who had expected inflation to rise. The fall was in part due to the price of clothes and university tuition fees, which grew at a slower rate than they did a year ago, as well as falling prices for some games and toys, overnight hotel stays and non-alcoholic beverages. The key question is, has the result of the UK referendum on EU membership had an effect on prices? Clearly not as much as expected, at least in the short term, but a single month's figures are not indicative of a wider trend, and if anything, it's likely inflation will rise from here. While the depreciation of sterling, caused largely by the Brexit vote, has had some effect on the cost of imports, at first glance it appears as though retailers are not passing on any increases they are experiencing to customers. But earlier ONS data indicates that the cost of manufacturers is in fact rising. It says factory gate prices, which are the price at which goods are sold by companies to wholesalers, soared in October. So perhaps it's only a matter of time before the increased costs faced by companies is passed on to consumers, at which point inflation will no doubt pick up once again. If inflation rises, particularly if it gets above the Bank of England's target rate of 2%, pressure will build for a rise in interest rates, at which point people may well need to re-evaluate their household expenditure and long-term savings plans. Chief among things people should prepare for are a rise in mortgage rates. One leading mortgage broker has already warned that long-term interest rates are likely to rise imminently, leading to a surge in the cost of borrowing, which will hit 5- and 10-year mortgage products first. Mortgage lenders have, of course, been able to keep mortgage rates extremely low for homeowners, but if long-term rates rise, they will no longer be able to hold rates on their products at the levels we've seen for the last decade or so. Clearly, anyone looking to take out a mortgage or remortgage needs to take into account their own financial circumstances and see a qualified mortgage advisor or broker if they're in any way unsure of what to choose. But it does seem clear that cheap fixed-rate mortgages may become more scarce as we move forward. See you next week.